Do you want to go ahead and get started, Rachel? What do you think?
Yeah, I think we definitely should.
Okay.
Okay, let's go ahead and start. I'm going to hit record. Looks like everybody's on here. Oh, you know what? You need to record, don't you? You are recording.
Yeah, we're good.
Yeah, okay. Welcome, guys. Thank you so much for joining us tonight. It is the 20th of January, 2016. And Sarah Mayo, who's my coach, and I decided to kind of join forces tonight because we're going to talk about the most fun topic in the world, which is taxes. I actually really do think this is kind of a fun topic, just because it's exciting to me because you're a business owner. And taxes normally when you are, working for somebody else can be kind of a little bit of a bummer, but if you're filing taxes, it means that you're working your business, and I think that's exciting. So we're going to talk about how to keep organized, like how to keep track of all of your information that you should be itemizing on your taxes because it's January. So we want to be starting the year off right. You do not want to be scrambling, a year from now trying to figure out everything that you've spent on your business, right? So January, we're starting off the year organized so that come next year, you're able to file your taxes for this year. And Sarah's also going to talk about how we file as Beachbody coaches, as well as what you can claim on your taxes, how to actually categorize those expenses so that you can, claim them on your taxes and get the most benefits as possible. Sarah recently met with was it a CPA that you met?
Yeah.
So it's kind of cool because once you get to a certain point in your business, it might be time to turn your taxes over to a tax professional. And for those of you that already have, a tax professional, that's awesome. They're going to know exactly what you can claim, and they're definitely going to help you. But for those coaches that don't be intimidated, because I filed my 2014 taxes by myself. It was not super time consuming. It wasn't scary, as long as you're organized, right? And as long as you're educated on what you can be claiming, it's not that stressful of a process. So we're going to break it down for you. I'm going to start by sharing how I stay organized. And I apologize. My computer that has all of my information on it is at school with my husband. So I'm going to show you what things would look like if you were starting to track information, which is totally fine. So I'm going to go ahead and share my iPhone screen. Let me do share screen. It's going to take just a minute. Sorry, it's installing a plugin real quick. Okay, can you guys see my phone?
Mm-hmm.
You can see it? Okay, cool. There are so many different programs available, apps that you can use on your phone. I'm going to share a couple different ways to keep track of your expenses. Do what works for you. I don't think that it's something you have to invest a lot of money into as far as having a program to keep track. But if you're a type A personality that wants to pay for QuickBooks, that's something that you can do, but there are a lot of apps available. So I spent a lot of time searching online, and through the Apple Store to find a good app that really made sense for my business. So I found this app. It's called Biz Expense Tracker. You guys see that in the top left? And this has been a really cool app to use because I can track personal things and I can track business things. So I'm going to click on the business tab. And basically, you can log everything that you ever pay for in your business. So I'm going to click on New Log, and this is what it looks like. So I'm going to title this whatever let's say my Shakeology went through today. So I'm going to click on this particular log. And actually backtracking, this is like my category. So for me, I have my business and I have my husband's business. And before we get into what you actually track, it's important to tell you guys that you need to be tracking those expenses separately. Because if you yourself have a business and then your spouse or your parent or your child is also an account that you run, those need to be filed separately, right? You're not going to file all of the expenses for your husband and yourself together. So I'm going to say that this is Rachel's business expenses. I'm going to hit save, and I'm going to start the date for January 1st, 2016, and I'm going to put the end date as December 31st, 2016, right? Because this is just this year. Basically, there's a lot of different settings on here. You don't need to worry about this too much if you're using this particular app. I'm just going to hit save. So now I have, it's like a folder where I can add all these different expenses. So here I'm going to click new at the bottom and hit new, and I'm going to click on new expense. And I'm going to say that my Shakeology went through today. So I'm going to actually create a new category. And I'm just going to put this as, let's see, I'm going to leave everything as other. And the reason why I'm going to leave everything as other is because I want to be able to show everything as an expense for this. So I'm going to use other. I'm going to enter the cost. Let's say it was $7 even. Payment, I'm going to change this to be my card. I'm going to put it as my debit card. Description, this is where I'm going to put what it was. So Shakeology HD. I'm going to hit save. And I would be able to add a photo receipt if I wanted, a quick name, notes, anything that I want to put in here, I'd be able to save. So I'm going to hit save. And all of a sudden, it shows me that I've spent $97 on my business, right? Let's say that it's tomorrow and I get paid. So I'm going to put it new because I actually also add my income into this particular app because I like to be able to see what I've been spending versus what I'm earning. So I'm going to click on new income. And I'm going to change the payment to, I'm going to put debit card. And description, I'm going to say weekly commission check. And I'm going to put the income, let's say it was $500. And I'm going to hit save. So all of a sudden you can see that this is listing this as an expense, and this is basically, you know, saying that I had positive 500. And so I don't know why this does it backwards as far as total income, but basically it's because, well, of course, it's because they're subtracting the 97 from the 500. So you can see that like I'm in the green, $403, right? I got paid $500, but I spent $97 today. So it's nice because I'm going to add one more category in here, because then you can click on category right here and it splits it out into income and other. Do you see that? So I like leaving pretty much everything as other, even if it's, you know, my Shakeology payment, if it's, you know, me going to the post office, because then there's a better way that you can make subcategories. And so you could actually sort this by date or by category. I kind of like it because I like this app a lot because you're able to send yourself reports. Because come tax time, it's great to be able to look at this app. And by the way, you need to back it up on your cloud pretty much every single time you add information onto this. If you are doing something on a phone, make sure you're always backing it up to your cloud or to your computer or emailing it to you. Because when it comes tax time, you can send yourself reports. So I'm going to go back to logs and let's see, options. And this is where I could back it up. Or I'm going to go to this particular category for income. And I have the option of, let me find where I can send the report to me. Anyway, I'll post in our groups how to send the actual report to you because I know it's like really simple, but now that I'm on the spot, I'm not finding it. But anyway, this is one way that you can keep track of your expenses. It's really nice that it's visual. It breaks down exactly what you need to be doing, where your money's going. And Sarah's going to go into specifically like what you can keep track of, which is kind of the actual meat of the message here. I also use Excel. So if we were on my computer, I could show you my Excel file, which I'm really sorry, I don't have it right now. I basically type everything into Excel. So I leave myself little notes, and I'm going to show you guys, I have actually a group on Facebook that I used to use for me and my assistant. So this was our little group. And in the file section, I had Rachel's expenses. And she was able to, I would send her like little messages on here where I'd say, okay, I paid my business fee, for, $15.95. I bought Beachbody protein bars. And so until it got updated into my actual expense folder on Excel, I would just leave myself notes. So I think it's really brilliant to send yourself an email, send yourself a text message, send yourself a message on Messenger, whatever it's going to be, because you might be out and about at the post office, out to lunch for business lunch or whatever you're doing, and you might not remember every single second to keep track of what you spent that money on, right? So what I do is I send myself a message. So I send myself a text message, which may sound weird, but then I can go back to that text message. I don't have to scroll through anything because who sends themselves text messages, right? It's not something you're going to have to look through. And so when I had an assistant, I would then send her the message and me the message. We'd add this to the folder of kind of like limbo land where the expense would get written on Facebook until the information got updated into my Excel spreadsheet. So on my Excel spreadsheet, I basically have the expense, the date, how much it was, and whether it was from my account or from my husband's account. And then come tax time, I'm able to send that to my CPA. And he's able to look at chunks like, okay, Rachel spent $900 on Shakeology or whatever, $900 on Shakeology. She spent $400 on mailing things at the post office. She spent such and such amount on her airfare to attend conferences for Beachbody. So it doesn't have to be super complex as far as how you keep track of everything, as long as you're keeping track of it. I also want to make like a little plug for having a separate business account. So I have a checking account that is just for my business. It's where my home direct for Shakeology goes through, my fees go through. Anything that I spend for my business, I use that account. And if you're starting off, you might not have a lot of money that you could put into that account, but that's okay. Just put a small amount into a bank account, open up a separate checking account, make sure that your commission starts going to that bank account and your expenses get pulled from that, because worst case scenario, if something gets lost on paper, I can go back through my bank account and I can look and be like, oh, that's right, I spent $20 at the post office 2 months ago that I forgot about. So that's a really good way to kind of have a backup, on top of all the real reasons why you should have a business account. But anyway, I hope that was helpful as far as different ways that you can keep track of your business expenses.
Awesome. Okay, thank you, Rachel. I'm going to go ahead and talk about the really fun part, which is all of the stuff that you can write off. So I feel like this is really important because, the deductions that you get to take as a person who is self-employed can be seriously helpful when it comes tax time and limiting the amount of income that the IRS is going to tell you that you owe them. So basically, you are a non-salaried employee of Beachbody. You will get a 1099, which is a form that they're going to mail you usually around the end of January. And that form is going to say, here is all of the income that we paid you for 2015. And so likely, you haven't paid any taxes on that. So you're going to probably have to figure out how much Mr. Taxman is going to want you to pay him. So I like to tell my coaches as a general rule of thumb that you should be setting aside anywhere between 20 and 25% of your weekly earnings into like a piggy bank or a savings account or somewhere that you're not going to really mess with it, but set that aside every week as your taxable portion of that week's earnings. Now, obviously, I am not a tax professional, so please do not come back at me later and tell me oh, you said such and such. This is just what I've been doing. And your, family's income and stuff might put you in a different tax bracket. So you'll need to kind of gauge where your family's at with what your tax bracket is. But for most of us, anywhere between 20 and 25% of your weekly earnings set aside is a safe amount for your income tax that you're probably going to have to pay. So, that being said, let's say you've gotten your 1099 in the mail and now you're ready to start doing your taxes. So if you have made more than $600, you got a 1099 and now you want to start taking your deductions. So all those things that Rachel talked about as far as postage or Shakeology or traveling expenses, all of those things that you collected receipts for and you organized on a spreadsheet. Or even for me, I keep all of my receipts in one of these accordion file things. And so I have one for every month of the year. So the actual tangible receipts for my business go in each slot for the month. And then I actually use a separate account for all of my Beachbody earnings and then a separate credit card for all of my business-related expenses so that if I can't find a particular receipt, I have my statement to back it up. But doing that will kind of help you break down your expenses every month, but you're also going to need to kind of itemize your deductions as far as different things that you can write off. And so likely chance is that in order to itemize those deductions, you're going to have to file what is called a Schedule C. And this is a document, a tax document, that is where you will deduct and itemize all your different expenses. So I'm going to share my screen and I'm going to show you some of the different categories that are on the Schedule C to give you an idea of the kind of things that have categories that you can write off. So give me just 1 second.
And while you're pulling that up, Sarah, I was told that a Class C or Schedule C is the most audited, frequently audited category, which you probably were going to share. But this is another reason why it's so expensive I don't need to talk to you guys about being honest because that's a no-brainer, but having those receipts. as backups, because if you were to get audited, you want it to be an easy process where you can send them your Excel spreadsheets, you can have, copies of all your receipts or whatnot. So it's super important to do this step by step so that at the end of the year, you're not like, oh my gosh, how do I find everything, right? So I just wanted to share that.
Yeah, absolutely. It's pretty awesome being self-employed, but it also is going to be a great deal of responsibility on your end to make sure that you're being responsible with your spending. And as far as the IRS is concerned, they obviously will check your Schedule C. Because they want to make sure that you're not taking deductions for things that aren't legitimate deductions. And so these are actual categories from my Schedule C last year. So I put them in this Word document and then kind of broke down exactly what fell into those larger categories. And I will post this document in our Teams so you can, keep it handy or whatever. But this is what was actually on my Schedule C that I was able to write off last year. And I'm planning to write off again this year. So one of the categories on your Schedule C that you can write off is advertising. And so that would include any money you pay for Facebook advertising for ads on your like page, any promotional materials, business cards, flyers, anything that you would use to advertise yourself as a coach. And I was told by my tax professional that included wear and share because it was advertising workouts that I was promoting, that I was selling. So if it had a logo on it, I could write it off. That doesn't mean I can go to Macy's and buy brand new Nike workout tops or shoes and write those off. Now, you will hear different things from different coaches. And obviously, like I say 1,000 times, I am not a CPA. I'm not a tax professional. But this is what I feel good about. And this is what I did last year. And I haven't been audited, thank goodness. So I feel like this is a good starting point for you guys. I would recommend that you talk to whoever it is who's going to help you with your taxes, and maybe read a little bit more about the descriptions online that the IRS, allows for deductions for. But this is what worked for me for advertising. So anything that is actually advertising you or your business counts. You are able to write off mileage and expenses related to your vehicle for business use. So if you had to drive to Super Saturday, track that mileage because you get a certain, I think it's a certain number of cents per mile. And so you get to track your mileage for anything business related. When you drive to the post office, if you drive to people's houses to deliver packets of Shakeology, anything that requires the business usage of your vehicle, keep track of that. Commissions and fees. This is the category that my tax professional let me write off my monthly business expenses. My monthly business fee, the required $15.95 fee to be a coach. I was able to write that off under this category. There's another category called depreciation. And this one, I was able to write off a portion of my laptop that I had purchased in 2014. So how that works is if you've purchased a piece of technology related to your business for business use, your tax professional might advise you to put it in the category of depreciation because each year when you file your taxes, you will still be able to claim a part of that device, the depreciated amount of it on your taxes. So instead of being able to write it off the year that you bought it, you're able to write it off in a span of 5 years. If you anticipate having it that long, you'll be able to write a portion of it off every year as it depreciates, which will also help lessen your tax liability that way too. There's a category for mortgage. So if you are currently a homeowner and you have a mortgage on your home and you have a room in your house that has a door, they deem that a home office, but that room has to be used for business usage. So it can't be a room that has multi-purpose meaning. So for me, I rent, so I can't use that. But even if we did have a mortgage on this home, the room that my business takes place in is a common room with no doors. So I can't write off that as a part of my mortgage, as a part of my deductions. So that's something that I would definitely check with your tax professional about and find out if you qualify to have a portion of your mortgage written off as a home office business expense, because that can definitely help. You want to get as many deductions as possible to lessen the amount of taxes that you're going to end up having to pay. Legal.
Can I interject real quick?
Okay.
For that reason, I moved my office, which I'm in right now, into a closet. This is an 8 by 6 foot space. It has a door. I only use this for business purposes. Like, I'm not ever in here for anything else. And the reason why we did that is because my tax professional was like, if there's any space in your house that you can switch out storage for an office, we just, decluttered a little bit, moved some stuff into our garage, and all of a sudden I was able to have this space. So it's a little bit quirky that I work in a closet, yes, but it feels good. It feels like an office, but if you're able to rework the space that you're in to do something like that, it's so worth it because we're able to write off the square footage that I'm in every single month.
Yes. Exactly. That's a huge benefit to you. And as your income grows, you are going to want to be able to write off as much as possible because, why pay taxes that you don't have to? There's definitely benefits to being a small business owner, so you want to take those. There's another category for legal and professional services. So anything that you have to use relative to your business, like a CPA, if you're using a CPA to help with your business expenses or anything like that, keep track of that. There's a category for office expenses, and under that category, I was able to write off any office supplies that I purchased, like printer paper, printer ink, pens, Post-its, files, anything that I would use for my business office, envelopes for mailing my Shakeology packets, and anything else that you would use to operate your home business. So keep track of those things because they add up. And one thing that we do in our house is anything that is relative to office supplies, I make sure that I'm the one who purchases that with my business related expense in my card, so that way I can write it off as a office expense for my business. My dad is self-employed. He does the same thing. He has a separate account. And so anything relative to office supplies, he's always the one to buy it because he can write it off and it helps his business. Another category listed on the Schedule C is supplies. And you'll notice that some of these categories are very vague. And this is where things get subjective. And this is where you need to really consult with your specific tax person and find out what they recommend. Now, this is basically what my tax professional let me do, but yours might say something different. So under this kind of vague category, this is where my professional allowed me to write off my Shakeology. Because in their eyes, when I explained it to them, I was able to write it off because it helped me maintain my active status in my business. And it was a supply that I needed in order to successfully operate my business. And so I also put the packets of Shakeology that I buy and use for samples under that supply category as well. Now, there are some tax professionals out there who I have heard tell coaches they can't write off their Shakeology. Mine, however, felt that this was a required business expense and that the packets of Shakeology were a supply needed to promote and advance my business. My workouts were also considered supplies of my business, and so were the supplements that I use. So for me, that is what fell in that category. Again, please talk to your particular person and find out exactly what their definition of supplies would be as you explain what coaching is and how you operate your business.
Well, and I think that you can also explain, if they don't quite understand, that being on Home Direct for Shakeology is a requirement to qualify for Success Club.
Exactly. Yeah.
You don't have to explain all of what Success Club is. It's also a requirement in order to qualify for those leads.
Mm-hmm.
So because Beachbody makes it a requirement to receive leads and to be part of Success Club every single month, because yes, you could get active other ways. It's a requirement, therefore it's a tax write-off.
Yes. Exactly. That's exactly what mine agreed with me also. So I'm going to continue to explain that way too. There's a category for travel and meals. So anytime you book a flight or rent a car, hotel, eat food while you're on a business trip, that is related to travel and meals. Now, that would include Summit, Super Saturday, leadership, anything relative to Beachbody, a retreat, etc. Now, I go by the kind of adage to only write off 50% of the cost of my meals. I know some people who don't. They write off 100% of their meals. And I know some people who, anytime they have dinner with their spouse, they write off that meal because their spouse is either a coach also, so they consider it a business meeting, or because they end up talking about coaching, because naturally we always end up talking about our businesses somehow, it turns into a business meeting because business is discussed. So this is loose also. This is something that definitely you can really stretch. And so if anything, err on the side of caution, but also remember that you need certain deductions in order to help your tax liability. For me, I feel good about 50% of my business related meals being written off. Because I know that can, in the eyes of the IRS, can be loosely based. And then there's a category for miscellaneous. So let's talk about really general. This can be many different things. This is where the category, however, that my tax person let me put my postage. So anything that I mailed relative to my business, I was able to write off the postage. My website fees, so that would include the fees that for my domain, for Zoom, to pay for my monthly subscription, my monthly buffer fee, any other like monthly fees relative to my business. I was also able to write off part of my cell phone usage as a business expense because I use my phone partially for business. Your professional will help you determine exactly what amount is appropriate to deduct for that. Same goes for internet usage. So since I work from home and we have high-speed internet, I was able to write off a portion of our family's high-speed internet because I use it daily to access my business online. And again, that is something that they will help you deduct the correct amount for. I put event fees under this category, and that was fees I paid for registration for Summit or Super Saturday, any sort of fees relative to a participation in a business event. And then gifts. I was able to write off gifts that were purchased specifically with a business use or for a business associate. So keep that in mind if you're gifting things to your coaches for hitting a goal or success club, different things like that. Keep track of those receipts because you can definitely consider those a business expense. But obviously keep it in a realistic boundary here. Don't go by your coaches, crazy, extravagant things, or worse, buy them for yourself and then say they were gifts for your coaches so that you can write them off yourself. There's really a lot of ways that you can kind of fudge the line here and get into that gray area. And that's where things get a little tricky. And so my advice is to always err on the side of caution. So just to summarize all of that, some things to keep in mind is to be detailed. The more you have to show for your expenses, the better. So get a file folder or whatever method works for you as a place to keep your receipts, or get one of those apps like Rachel talked about that you can take a photo of your receipts so it's stored somewhere electronically, because you want to have something to back yourself up in case IRS ever does want to clarify something that you wrote off. Be reasonable. So write off things that are actually legitimate business expenses and don't try to get too loose with being a self-employed person and determining what you can write off on your business. To each his own, but I'm always playing by the book. I'm afraid of getting in trouble. So for me, I'm very, very cautious about exactly what I write off and how to keep track of it. And then be organized. Don't just throw everything into like a shoebox and then just hand it to your CPA or H&R Block and just let them go to town, because they're not really going to understand, the different categories that things could go in, what the expense was for. And so it could hurt you in the amount of things that you're able to deduct. And lastly, this is very subjective. The tax laws are very loose and they are open to interpretation in some ways. So that's why what my professional let me do might be different than what yours or someone else's. So I would definitely be as organized as possible with your spreadsheets. Bring everything down when you go to talk to somebody, and be very thorough in what you explain to them. And as long as you show proof and reasoning for how it will directly impact and has impacted your business, it can be determined a legitimate tax write-off. And that's going to really help you come tax time. Because being self-employed, we're going to owe taxes, and they only have you pay taxes on your taxable income. And that is the amount of your income that you have left after you deduct all these things. So let's say you start out with $20,000 gross from Beachbody, okay? But you have been very good about tracking all your expenses. And so you've been able to deduct $12,000 worth of expenses for the year. Your taxable income at that point is only going to be $8,000 that you're going to be asked to pay taxes on. So obviously, the more you are able to deduct and the more thorough you are, the less tax liability you have. Now, one thing that surprised me last year that I didn't know about is that we are subject to a self-employment tax. And this is a 15.3% fee that we are all taxed on if we make more than $600 a year, I believe, or maybe it's $1,000. But either way, it's likely that you guys are going to experience that, and that is how the IRS gets their taxes for Medicaid and Social Security. They charge us a self-employment tax, and it's 15.3% of your income. So even if you have all these deductions and you have everything, by the book, you're still going to be charged this fee. And so keep that in mind when you're planning about what you set aside every week or every month for taxes. Set a little bit extra aside for that, because that was something that I was not prepared for. Obviously, if you have a partner or a spouse who is a W-2 person who's been paying taxes out of their earnings all year long, they're paying into their taxes could offset the amount that you end up owing, but there's still going to be a small portion that you're probably going to end up owing just because of that self-employment tax. And as your business expands, you're going to need to think about different ways to kind of offset that self-employment tax. And that's where some coaches get to the point of needing to become an LLC or an S Corp and different things like that, and incorporating. And I'm actually thinking, I'm at that point right now in my business where I'm starting to incorporate to an LLC because I'm thinking bigger picture and less tax liability down the road. But at this point that most of us are in our business, just keep in mind that you want to be able to write off as much as possible, and that you're going to probably owe some money, or don't be surprised when you have that self-employment tax show up on your 1040. I hope that this has been helpful for you guys. Obviously, Rachel and I are just sharing our own experience and what we find to be helpful in our business. But hopefully that gives you guys a little bit more direction.
So just to add a couple things, Beachbody is required to send those 1099s out by January 31st. If you do not receive yours for last year by January 31st, or it's the 31st, you're able to send an email to Beachbody, and they will email it to you, because they're required to mail it out by the 31st. So you might not even get it until, the second week in February or first week in February. I've had a couple coaches ask me about what they can do or what they should be doing if they made under the $600 in order to be sent a 1099. I'm not a tax professional, and maybe Sarah, you know more about this than I do, but I have been told by other, more successful coaches than me that you're still able to deduct things from your business. So just because you didn't get a 1099 does not mean that you are not allowed to deduct expenses from your business, correct?
Correct. Yes, you still can deduct those things. Obviously, you want to as much as possible, but just don't let that deter you from doing that. So you're still eligible to.
Yeah. Would they still file as a Schedule C if you didn't get a 1099? or does it just
It
get added
depends
to
on
your?
how many deductions they have and the variety of it. So when I went to meet with my person last year, I didn't even know what a Schedule C was. I was just expecting that I was going to tell them all the things that I had written off and that they would go under the itemized deductions part of my 1040. Because of the amount of income I had from Beachbody on a 1099 and the amount of deductions I was trying to take in so many different categories, it fell under the Schedule C. And that was in my best interest as far as clarifying exactly all of my business expenses. Now, that's just my situation. Somebody's could be different, but that's where your tax pro is going to tell you what's best for you and your situation.
Something random that I kind of wanted to share too is for any of you that are looking to purchase a home and using your income as, contributing to be able to afford a mortgage, is it 2 or is it 3 years of tax refunds that you need to have in order to prove to use your income? You should know that,
exact quote right now, and it's 2 years. You have to have 2 years of tax returns reflecting your income with Beachbody. And I will tell you that if you are relying heavily on your Beachbody income with your husband or your partner's income for qualifying for a mortgage, that you need to keep in mind that what the most lenders do is they average, like for instance, they'll average 2015's return with 2016's return, let's say, and they average your earned income after deductions for both those years, and that is what they use when they qualify you for a mortgage. So this could be a little bit problematic for you if you're needing every cent of your Beachbody income to count towards a certain amount you want to qualify for. All those deductions that you took are going to come back and hurt you a little bit because your lender will use your income after the deductions. So for instance, for me, I was thinking I was doing everything great last year, making so many deductions, but it ended up dropping my income to only like $5,000 after all my deductions. So when my husband and I, this last year in 2015, met with our lender about trying to get our ducks in a row to get a home, I kind of had a little bit of a reality check when I realized that $5,000 of income with whatever I end up making this year is going to average out to be not what we needed it to be for a mortgage. So in that case, I'm not taking hardly any deductions this year. And I'm just choosing to do that because I need my income on paper to be as much as possible. And so you kind of need to think big picture when you're doing your taxes. Am I going to be trying to qualify for a new loan for a home? Am I going to try to buy a car? Different things like that, because if they're going to go on what your tax return says, you'll want to make sure that your tax return after deductions lines up with the kind of spending that you're anticipating you're going to need to make. Because the lenders can't necessarily determine your gross income as your actual income because you took all those deductions.
Yeah, they go off that your taxable income.
Yes, they do.
So I'm so glad you went into that because we have like a theme as coaches, like thinking big picture, right? So I'm on the other end of that. We bought our house before I became a coach. And so I'm wanting to get as many deductions as possible. And I felt a little bit embarrassed or sick about it, like showing my husband, like I have like $12,000 to $15,000 worth of tax deductions from 2015. And I was feeling almost like a failure, like half the income that I earned from Beachbody is I spent, but really for us personally, we're in a good spot with that because since the self-employment tax and, the Schedule C taxes is such a high percentage, you want as little as possible to be taxed on, right? But again, like what Sarah was saying, if you have a big goal in mind to have this go towards a home, especially, you want that income on paper to reflect the full amount that you made as opposed to $5,000.
I mean, it was great for what I ended up owing last year, which was hardly anything, but it definitely isn't helping us right now with what our big picture goals are. So, yeah.
You mentioned having your spouse's tax withholdings kind of offset your taxable, what you might end up paying in taxes. Obviously, everybody will do what works for them, but that's what we do too. Josh, even though he's the only one working and we have one child, he's able to be taxed less, right? Like he could claim more on his taxes, but instead we still have him claim none of us. So he doesn't claim me, he doesn't claim Griffin. So they're taking more taxes out of his paycheck than necessary, so that when we're filing next month, we're not having to pay out of pocket a ton. You know what I mean? So that's a good way to kind of have a little bit of insurance if you do have a significant other. That's clean. I know you mentioned that, but it works for us.
Yep. I mean, if you can, if your family is in a place where, the husband or whatever bringing home a little bit less is worth not having to pay out as much in taxes at the end of the year, you kind of have to weigh the pros and cons of having the money now or owing it later. And I mean, everything is so different for everybody's situation, but that's one option, is to have your partner increase the amount that they are taxed on their W-2 to offset the amount that obviously you are not taxed.
Yeah. Do you guys have any questions? Sarah, that was so helpful. But yeah, we have a question. What's Lauren's question? Oh, Sarah's gonna unmute you real quick.
Sorry, let me.
There you go.
Thank you for hosting this. I'm Lauren. I'm in Whitney's downline, and I've got two questions. So one, just confirmation that the 15.3% self-employment tax, that's off of your gross income, right? Not your, okay. And then in my situation, my business is I'm very much still growing it. And with all of those deductions, my deductions are going to exceed my actual income if we're looking at Shakeology every month. And so what happens in that scenario? Is there a point I guess I probably still need to file, but then maybe I just wouldn't owe anything, or how does that play out?
I think that in that scenario, you would definitely still want to file and itemize all your deductions to show proof of that. But you probably would not end up owing anything. I mean, if you're obviously paying out more than you're bringing in, then you're kind of in a good spot as far as your tax liability goes.
Or I'm a really bad coach, but
no. I mean, you're a business owner. You're starting out, and you cost money. I mean, you have to spend money to make money. So I mean, we're all in our first years in that hustle mode where we're spending and we're working hard to build something. And so, write that stuff off. Yeah, absolutely.
Well, and I really try to help my coaches have the mentality where they understand all these little things that you're paying out. It's a tax write-off. Not only is it necessary for your business, we're so lucky that we do not have massive expenses for owning like a brick and mortar store, right? Like we don't have to pay a massive mortgage. We don't have to buy a building. We don't have to pay employees. There's so many things we don't have to do, but still treat this like a business. Still treat this like a legit business. So if you're paying $5 for Rana Designs, do it, right? Like those things are going to really make a big difference in how professional your business is, how successful you are as a coach. That doesn't mean go buy Tiffany necklaces for your whole team and be like, woo, tax write-off, right? Like you don't go crazy, but it is like those things, and explain it to your spouse. Sometimes your spouse of all people might be like, babe, why is your iTunes account being charged, $30 here or $15 there? And you have to say like, that's a business expense, that's going to my marketing for my business or whatever, but have that mentality. I think it also helps when you talk to your coaches or even yourself about Shakeology. Not only is it so good for you and so important for you personally, but for your business, but again, everybody's might be told something a little bit different, but my tax professional said it's absolutely a tax. So how often do you get the best food written off as a business expense? Like it just, That's pretty awesome, right? So have that mentality of spending money on your business it's a good thing. So within means, but I just try to help people have that mentality. You're not a bad coach for having more expenses than you're earning. That's what all of us start out as. It's nice because it means you're not going to have anything to be taxed on, which is a good thing.
Okay, thank you.
Anybody else have a question? Hi, Linda.
Hi. This maybe doesn't have anything to do with taxes, but one of the big concerns about when I choose to become a stay-at-home employee instead of a employee, is there any category for medical insurance? Because I don't have a spouse who I can put my insurance on. So that's one of my big concerns about when it becomes time to leave corporate America. And is there a insurance?
So, I mean, there's definitely, even though Beachbody has a group option that allows you to get insurance at a lesser rate than you would with a private option. But I'm going to look at my Schedule C from last year right now, and I'm pretty sure that there is.
Sarah, I don't think that it goes on the Schedule C. I think that there's a part where you file your taxes that you mark if you're self-employed, if you have to cover your own insurance.
Okay.
Because I have private insurance, like my husband's a veteran, so we opted out of his insurance through his work because his insurance is free. So it didn't make sense for us to pay for a family plan when his is free. So is that sounding right to you, Sarah?
Yeah, actually, line 29 of the 1040 is self-employed health insurance deduction. So,
Yes.
there's absolutely a spot for that.
Yeah, which is great because, I have really good insurance now, but it's something that we've paid for out of pocket the whole time since I left my job. So definitely make sure that you're writing things off. I liked to meet with a tax professional because he interviewed me and my husband, and he was able to find things that I didn't even think about to write off. Like, Sarah did such a good job outlining everything. I couldn't think of anything else that was left off of there. But, your cell phone bill, your internet, those type of things really, really add up. So it's nice that we get kind of rewarded as being a business owner, for paying some of those living expenses that normally you wouldn't be able to pay off. Any other questions? Caprice, do you have a question? Okay, Sarah will unmute you. Hi, Caprice.
Hey. Can you hear us? Oh, no.
Bummer, we'll give her just a second. Caprice, come back. Anybody else have a question? Well, Caprice is probably getting back on.
This is Lauren. I have another one.
Okay.
So my husband and I file jointly, and we both have full-time jobs, and then Beachbody is something I get to do on the side. Is it the same tax form that we would normally file, and then there's an additional part where I declare kind of the independent contractor piece, or is it something separate altogether now that I've got this piece to add to my filing?
So you'll still do like your married filing jointly 1040, but then there's a line on the 1040 that says business income or loss, and then it says attached Schedule C or Schedule C Easy or whatever. So that's where people who have a 1099, their income ends up after all of the deductions that occurred on the Schedule C. So when I look at ours, that's where my lovely $5,000 shows up after all my deductions. So it looks a little puny, but that's where it ends up. So yeah,
Okay.
you would still do the same thing. There's just going to be an additional form, which is that Schedule C that has all the like things broken out on it.
Okay, that's perfect. So that's where my negative number will show up. Okay, so that's good. Then that'll maybe help us and
Yeah, it
not
should. Absolutely.
pay as much. Okay.
Really, when I filed last year for 2014, my business was probably similar to where yours is at, and what I had paid out was more than what I had earned. And it still just lowered our tax refund a tiny bit because just a tiny bit, but overall, like, it could very well help you get a slightly bigger return. So that's a good thing. Caprice is back. Hi, girl.
Yeah, Caprice asked if we could write off gift cards for challengers.
Yes.
So I would put yes, because I would put them under
What
gift.
Sorry.
What about if we, like Alicia and I do our challenges together, so when we go 50-50 and split the price, and she pays me, sometimes she'll PayPal me, sometimes she'll give me cash. Do I just write her a receipt for the part that she's paid for me so that she can obviously claim it, and then I would like use it as
That's a really good idea. I think that's a good idea. Just have it in writing somehow, whether you have paper receipts or whatever. My tax professional had me put that as shared commission for things that I've paid for, like challenges. So challenge prizes, it's essentially like I'm using my commission to pay for something for somebody else. So Sarah, maybe yours had you do it a little bit different, but there's a category titled shared commission. So it's almost like as if that's also where I wrote off having a temporary assistant, was her pay, what I was paying her. I didn't 1099 my assistant. She didn't make even nearly enough for me to like get that far, but it was considered shared commission. So somebody might have different advice, but that's where we put challenge prizes, gift cards to customers that bought something from me. And that's a big tax write-off, especially if your income is reflecting the full $40 or $50 commission, and then you're giving $20 back to a Target gift card. You want to make sure that your taxes is reflecting the actual amount that you earned, rather than she made $50 here when in actuality you made $30. That's a good question. Anybody else? Was this helpful?
Very.
Good.
Good, I'm glad. Sarah, thanks so much for all the information that you put together.
You bet. I didn't know about that app, so I might have to try that. See if
The app is great. I had kind of an emergency where I got a new phone in August and I didn't back it up. So I went and everything automatically backed up to my cloud except for the business tracker. So I lost 8 months worth of information in the business tracker, which is why it's empty, because I've been so burned by that I haven't gone back to start using it again. I just switched to Excel. I might move forward with using QuickBooks because that's so easy to just send to your tax professional, right? Like you can do that, but the app is great. I just have been a little bit jaded, so I haven't wanted to re-enter in all the information. But yeah, especially since it's January, it's a good time to start using a system that's going to work for you. So thanks for being here tonight, guys.
Yeah, thank you. Have fun in LA.
Thank you. You'll see probably lots of annoying pictures. I'm excited about it.
Awesome. Well, you guys have a great night, and I'll probably get this posted in the morning for those who missed it or want to replay it. So have a good night.
Okay, thanks.